Welcome to the Be Better podcast with Infinity Real Estate Services. True stories from Bakersfield's business owners and entrepreneurs. We have sold over 50,000 homes in the Kern County area, and we are still going. Delete your limiting beliefs. If you have a dream, turn it into a goal. Only massive, inspired action will get you to where you want to be. If you're starting a business or looking to grow one, you're in the right spot. Welcome to the Be Better experience.
Hey everybody, welcome to another episode of the Be Better podcast, brought to you by Infinity Real Estate Services. The Be Better podcast is not just about real estate, it's about being better in general. So wake up every day and be your best self. I have a special guest today. She's not only a personal friend of mine, she's also an amazing lender, and her or someone from her company is almost always in our office. Thank you so much for being here today. Kelly Carrera from Signature Home Lending.
Thank you, Summer. Your podcast is actually pretty hard to get onto. You're a pretty popular gal these days.
Thank you.
So thank you for inviting me.
Absolutely. We tried to put this together a couple months ago, but then it kept getting booked.
We did, we kept getting booked. So I was waiting for my chance, and here I am.
I'm so glad you're here. So I know quite a bit about you, but our viewers obviously only know what I've just told them about you. So, Kelly, where were you born? Are you from Bakersfield or you transplant?
I am actually from Bakersfield. I lived here most of my life until I think high school, and we moved to the Bay Area for 4 years. Ooh. That was pretty cool. But I think they kind of say about Bakersfield, you always come back.
It's a boomerang.
I probably would have stayed, but unfortunately at that age, I definitely couldn't afford to support myself living in the Bay Area. So I came back with mom and dad for sure.
It's always nice to have that mom and dad safety net, right?
Definitely, definitely.
So what did you do for work prior to getting into lending? Like what was your first job out of high school? That's what I want to know.
Oh, man. You know what? Actually pretty cool. I think when I was kind of ending high school, I worked for Olin Mills Photography doing family photos and calling and scheduling appointments. And then I also had a job at a place called Gophers, which was like our restaurant runner. But mind you, this was like 30 years ago. So pretty cool that, like, now that I think back that we had that long ago. But they had like four restaurants on there, like an American food, Chinese, Mexican. And then they would just call me and I'd ask them which menu they wanted to order off of. And I would place the order for the restaurant and someone would pick it up and drop it off.
How cool.
So, yeah, and that's the only company I've heard of that did that up until we got these new, the restaurant runner. Now we have Uber Eats and all that. So I thought it was pretty innovative.
So many.
They did so many years ago. I kind of wonder what happened to them now. Maybe they own Uber Eats.
Or, possibly. Hey, that's a possibility. I've never heard of Gopher. Restaurant Runner was like the first company that I was aware of that actually did,
and it was so long ago. Very small company. Very small.
They were onto something. They should have.
They were onto something. That's why I'm curious where they
all they needed was an app.
Right. I don't think we had apps back then.
I don't think we had these back then at all. So that's exciting. So how does one transition from Olin Mills and Gopher Food Runner to lender extraordinaire?
Right. So I actually, when we came back to Bakersfield, I worked in fast food industry. I worked at Burger King, I think, for 4 years. I worked in restaurants pretty much for, I think, about 16 years, restaurant and food industry. Baker Square was my big one. I think that was 8 years. Do you remember that?
Man, they had the best peanut butter chocolate pie ever.
Pies.
That chocolate was like a fudge layer. Yep. I don't even know how they did that.
Good stuff.
That's amazing.
But that was, so when Marie Callender's was our big competition. So they're still around. But I worked there for quite a while. Didn't eat pie for a very long time after I left. Holidays can be stressful when you work at a place that has pies. But actually my sales manager, Joe, who I just did the podcast with about a week ago for our homebuyer seminar.
Hard Money Joe.
Yes, Hard Money Joe. He was one of the cooks at the restaurant that I worked at, and he left and went into lending. And we were friends for many years. And I called him one day and I was like, Joe, I can't do this anymore, man. Like, I'm just done. Like, if the one more person complain that their omelet's wrong, like, I'm gonna lose it. Like, I'm done. I said, but I don't know what else to do. You know, I've never done anything else. And he said, well, come and apply for a marketing position. You know, we're creating this new position. You'd love it. I know you love to talk to people. You love to be out and just doing different stuff. So I went and applied for the job, and I did not get it.
Oh.
And it was funny because all the things you kind of wonder about how an interview goes, Joe told me everything that, you know, dumb that I did in my interview, basically, because my boss told him, you know, they were very close. So it was kind of funny, but he told me, you know, I was stressed out. I was working 2 jobs, and I was just trying to do something better, you know, be better for my life. And so he told me, go get your nails done, get your hair done, do a little, you know, me day, come back and I got you a second interview. So I did all of that, went back, didn't get the job again. But he said, come be a loan officer. And I'm like, I don't know anything about real estate. How am I going to do that? He said, just come. So they hired, I think, like 18 of us at the same time, this mass hiring.
Oh, wow.
And they picked 4 or 5 people, I think, to pay a $1,500 a month salary to. And I told him I can't come without the salary because I don't know what I'm doing. I've got to have some type of income coming in. And so I transitioned, and it was hard. I mean, talk about intimidating. Because a lot of it was on the phone initially. I didn't know anyone, and it was just a different environment. I was good at talking to people, but a lot more one-on-one.
Right.
And not calling them on the phone. So it was a big change for me, and I'd hear other people on the phone, and how do I do that? So I picked up a real estate book. They used to be really thick then because we didn't have social media, so everybody posted in the magazines. That was the it thing. And I just started dialing real estate agents and introducing myself and asking if I could bring some information by. And when I finally got some people that were willing to give me a shot, you know, then I just kind of went from there. But it took me a long time. It was hard to build up my confidence. Horrible at math my whole life. Never, if you would have ever told me I'd be in finance, no way. No way. But I love helping people. I love talking to people. And once I learned how to, you know, put math together with doing that, it became fascinating. I would, you know, oh my gosh, like, what's the formula to figure this out? Or like, how do I tell somebody to pay their house off faster? Like, how can I, you know, calculate this or calculate that? And I just kind of fell in love with it.
So it sounds like you went from being intimidated by this profession to being inspired by it.
Absolutely. It definitely inspiring. And I think coming up this November is going to be my 19th year at Signature.
Woohoo!
Yeah,
I'm gonna clap for that. That's
yay.
awesome. Good job, Kelly.
So that's that was pretty cool. And of those initial 18 that were hired, I literally am the only one that's left.
That's right. That's right.
So I made it.
Only the strong will survive. That's awesome. I did not know any of that part of your story, so that's exciting. It's been a weird year, huh?
Yes, this market has definitely been challenging. I think, you know, I'm so fortunate because we have a really strong team and very knowledgeable. We have our corporate office that keeps us really up to date and informed with new programs and always adding new investors. But it has been challenging. Yeah.
So I know the answer to this, but I think there's probably a lot of people in the general public that don't know the answer to this question, and I hope you know the answer to this question. Otherwise, I'm really leading us down a rabbit hole right now, aren't I? What's the difference between an FHA loan and a conventional loan?
Okay, well, there's, I guess, kind of broaden that out a little bit
from a money standpoint. So, like, I'm a buyer and I'm coming to the table, and let's just say, for the sake of argument, I'm a first-time buyer, and I also have good credit.
Okay. So there are a lot of different types of loans. Just FHA and conventional tend to be the most popular. So probably why you're asking about those two specifically. I would say FHA is generally a little more lenient. It's a government-insured loan. So because the banks have that added security, they make it a little easier for buyers to qualify, a little less down payment, a little more lenient on maybe some of the guidelines, getting gift money or family helping you, down payment assistance. But we do also allow all that stuff for conventional. I would say most of the time, first-time home buyers generally end up going for the FHA, mostly because FICO scores are a little bit lower.
Right.
And they're more forgiving with that. The mortgage insurance that's added into your payment, which is just an added insurance for the bank, and everyone has it on their payment if you're not putting 20% down.
Right.
Is the same for everybody on an FHA loan. If you have a 640 or an 800, on conventional loans, it is very credit score driven. So someone that has a very low credit score would have a much higher payment doing a conventional loan. So I see generally when people come in, doing the application is so important because we want to know your income, your assets, your FICO score. Generally, once we know those three things, that helps us knock out all the stuff that we don't want to use. And then we can start focusing on, whatever kind of assistance or if you're an FHA buyer or a conventional buyer, or if we're doing VA for veterans, or there's some kind of special product that we need to fit into.
So it sounds like it's very personal, case by case basis, right? So you're going to sit down, and when I send my client to you, you get to sit down with them, and together you guys are going to discover what the best path is for them, depending on their qualifications and how much money they have saved, right?
Yes. And I get phone calls all the time that are just so general, like, well, how much money do I need to make to buy a $300,000 house? Or what's the interest rate right now? Or
well, there's a whole formula to that.
Yes.
Yeah, and I need more information.
Yes. And I mean, I can throw out general numbers, but it's definitely easier when we have those facts to gauge it just towards that client specific
I have a
needs.
kind of left field question.
Okay.
Not how often. Is it often that people will lie on the initial application, and then as you're going further through, it's like that's all going to come out in the wash because you guys get the credit report and everybody they owe money to, like it's all in black and white to you. But do you still have people that come in and like, well, if I just pad these numbers a little bit, it's going to make it better? And then that, I would think that would cause a problem for them further into the transaction, right?
There's a lot of things that people are not always truthful about. And you can tell, I mean, after doing it for so long, you get used to body language and pauses when they're talking and things that were like, okay, tell me more about that. Sometimes people, they don't disclose property because it's not showing on their credit for whatever reason. Could be by error, or they did a certain type of loan that didn't report it, and they don't tell us. We're going to find out, and it's not because we're trying to find something that you lied about. It's just there's so many reports and background stuff that happens, that title searches, there is a paper trail.
Right.
But it's important. Don't lie to your lender.
Yes.
It's important that they're upfront with us about those things, because then I know how to navigate it.
Exactly.
Because something they think might be an issue isn't an issue, but it could cause an issue later in the transaction and prevent us from getting the loan if I don't know about it. So I kind of tell clients that when we submit a loan to underwriting, there are basic guidelines and rules that we have to follow, but it's also telling a story.
Right.
So sometimes there are reasons why, people are maybe somebody bought a house a year ago and now they want to buy another house. Well, the underwriter wants to know why do you want to move so soon? And are you really going to live in that home?
Right.
Because they're very big on not having people use owner-occupied loans to build a investment portfolio. So if you moved in and your neighbors are horrendous and you just don't want to live in that neighborhood anymore, or maybe now you got married and you have kids, like those are reasons why we want to move. We call it a motivation letter. But it's a story. Like almost every loan, there's something going on there that we need to explain or talk about.
Right. How many FHA loans can a person have at one time?
You typically one, but there are rules that you can purchase a second FHA loan if you're purchasing it within so many miles. And
secondary primary residence.
Yes,
right?
And I think it's 100.
I think you're right about that.
I think it's 100
because
miles.
I had a situation like that where I helped somebody buy a secondary primary home, and we're just having a conversation, Kelly.
And I have heard in the past that you can have one, like if you've outgrown the home that you're in now, but it's so extreme. I've never had anybody that actually has done it that didn't meet the mileage requirement.
Right. Theirs was over 100 miles in between, but I thought of a great question. So you had mentioned PMI, 20% down, right? So say I buy FHA, right? And then I come into $50,000 and I put all that down on my house, and that brings me underneath that 20%. What's the best option for me to get that PMI off? Can I call my lender and say, hey, I'm under 20%. Will you look at this? And they'll just change it for me? Or do I have to have someone come out and reappraise the property? Do I have to get a new loan? How do I navigate that?
Well, we actually get that question a lot. But unfortunately, on an FHA loan, they no longer take the PMI off if you pay your balance under 20%. That used to be the case. You had to have it for a minimum of so many years and pay it under. But now if you put 10% down, I believe, on the FHA, it will go away after 11 years. Don't quote me on that. You'll have to call me for a follow-up if you want to know that.
Call Kelly if you want to know the answer.
But conventional, that would be another reason
to go
why we might opt to go conventional. And I tell clients a lot too, when they buy their first home and if they have a big chunk of savings, I don't usually recommend, if it's their first home, to throw all of that money into the down payment initially, because actually an extra $10,000 on your house, like on the principal of your home, can only will lower your house payment maybe like $80 a month.
It's not enough.
I mean, unless you're doing a significant amount, getting rid of the PMI, and then of course all that will add up. So I usually recommend take that money, put it somewhere else, make money off of that money. Then when you go to refinance at some point, or maybe you decide you want to upgrade, then take that savings and throw it into the house once you have a little bit more experience with real estate.
Right. And you're a homeowner now. So maintenance and upkeep on your home is your responsibility. And you're going to want a little bit of a amount saved for that, because you never know what's going to happen. So on a conventional loan, so FHA, it's 3.5% down.
Yes.
Right. What's the down payment with the conventional loan for a first time buyer versus, say I want to buy an investment property?
Okay, so conventional loan, first-time homebuyers can have a minimum 3% down.
Ooh.
Yes.
Just 0.5% lower than lower.
But it is a little harder to qualify with the minimum down on the conventional. Again, they're just a little harder to qualify than the FHA. Normally, people will put 5% down. And if you have a home now, whether it's conventional or FHA, and you're purchasing another primary residence to move into, it's just 5% down.
Okay.
A lot of people think it's 20%.
And it doesn't matter the mileage?
No.
Like I can have 2 houses in Bakersfield if I want to?
Yes.
Okay.
It just has to make sense.
Right.
That's the thing. So if you live in a $1 million home and you're buying a $200,000 home, the underwriter is not going to believe that you're going to move from one to the other unless something else is going on back there. Like selling it, or I don't know,
going through life changes and
something or something like that.
You're going to have to divulge all that information.
Yes. And that actually bringing up divorce. One thing I get a lot is spouse's credit matters. So if we're doing an FHA loan, we have to pull the spouse's credit, even if they are not going to be on the loan. So their credit score doesn't necessarily affect the spouse that is on the loan, but their debts do. So if one has a car payment, the one that's not on the loan, we call a non-purchasing spouse, has a car payment, we have to count that in your debt ratio. Whereas on conventional, we do not. So that also would be a reason why.
So even if they sign the interspousal thing that negates them from the transaction, their debt still is affecting them. Oh, wow.
And I have a lot of people that, have one person purchase a home in their name thinking that the spouse can use the first-time home buyer for themselves later and buy another owner-occupied. It doesn't work. If you and your spouse live together in a home that belongs to one of you and you are legally married, it disqualifies them from using the first-time home buyer program.
So buy the second house before you get married.
Yes. Yes.
So It's been a crazy year, right? It's just a little bit different. Every election year is like that, though. So if you've been in the groove long enough, you anticipate the swing before it even comes, right? But what is like the most common? Is there a more common? I'm totally butchering general English right now, but like a condition or an issue to arise at like the last minute that could potentially kill the deal or slow the deal down. Is there like a more common one that pops up? I know there's like several different factors, but is there something at the last minute that you see more often than not that could be prevented if we knew how to negate it?
I think I try to tell clients anything that you're going to do that's out of your normal routine, talk to your lender when you're in the middle of a transaction. So I've had clients that go out and buy all new flooring for their house while we're in the middle of escrow. Don't do that, because what if something could happen and you don't have a house to put that flooring in?
Right.
Purchasing a vehicle. I mean, there's tons of jokes out there and memes about like showing up to sign your docs with your new vehicle, and the loan officer's like, no, why?
That's a real thing, you guys.
That's a real thing, yes. So anything, dumping a bunch of cash into your bank account, making large purchases, quitting your job, like changing jobs. I have that happen more often than you would think when they're in the middle of a transaction. Like, hey, so I started my new job this week. Is that going to be a problem? I'm like,
very much so.
Yes, breaks. So most of the things we can get around, but it's just always wise to, even if you think it's silly, anything that's just out of the norm, just talk to your lender, before you do it, not after.
The two, I think off the top of my head, two scenarios where we ended up closing, but we had to, push it back and buy ourselves some more time. And one of the situations was an old PACE loan for some solar that, oh man, that can become a nightmare, right? And the sad thing about that was a lot of times the homeowners weren't even aware of the fact that this lien was placed on their house. So they don't know how to help you. They couldn't even tell you about it because they didn't know it existed. Right. And the other doozy, and this affects buyer or seller, is child support. The district attorney is not super helpful in those situations either. So that can slow you down significantly, especially if whoever it is not doing the things to prove that they're paying that.
Like the back child support.
Exactly.
Yes. So you can still purchase a home when you're making payments on back child support. But those are definitely things that, I'm glad you brought that up. You want to get divorce papers, child support order, all of that is paperwork that we will need when we qualify you, things that you're going to need for the loan process. So it is a good idea to get them up front.
Right.
Like have them ready.
So if you don't tell your lender about it, it doesn't mean it doesn't exist.
Yes, it doesn't make it go away.
It could actually cause problems for you and delay your closing. So
yes. And one thing too, I really want to stress to people is the application is so important to help you get to wherever it is you want to be. You don't need to be perfect when you come in. So you don't need to wait until you've saved $20,000 in the bank and you've paid off all your credit cards, because maybe perfect example, I have a client right now that had that $20,000 in the bank, and then he went and paid off a vehicle thinking it would help him. Yeah. And he didn't need to. He still qualified for what he wanted to, but now he doesn't have the funds to close. And so we need seller help.
Ouch.
So it's a little bit more difficult, like negotiating. And I feel bad. I know he's a little frustrated, and he did a good thing by paying off his car. And generally speaking, paying off an auto loan will help you significantly on purchasing.
It changes your DTI so much.
Yes, but let us help you with that. Like come as you are, and then we'll help you get to wherever you need to be.
And side note, DTI, for those of you who don't speak this language every time, is debt to income ratio. So that's how much you owe versus how much you make. Just to clear that up. Because sometimes I watch stuff and I'm like, what does that mean? I don't do this all the time. I don't know what all these acronyms and initials mean. I have one more question. I'm looking at my notes. It's a thing. Okay. All right. So it's the last fun question. Are you ready for this one?
Okay.
And then you'll have an opportunity to ask me a question. So if you could have one magic power for 24 hours only, It can be mind reading,
Okay.
invisibility, or shape shifting.
Has
Meaning
to be
you could turn into anything you wanted.
one of those three.
One of those 3 for 24 hours.
Okay.
Which one would you pick and why would you pick it?
Oh man, that's tough. I don't really think there's anything I'd want to shift into. I don't know. I'm not really into
You ever wanted to know what it was like to fly?
No.
Like a bird or
No.
nothing like that?
No.
Okay,
I'm happy watching the birds doing their thing up there.
So shape shifting's off the table. You got to
Yeah.
pick between mind reading or invisibility.
Man, you know what? I think invisibility could be a little creepy, and I might see something that I can't take back.
But you don't know what goes on in my head, so
Oh, right.
you might be able to recover from what you seen easier than what you heard.
That is true. But I think I would do mind reading. Yeah, I would probably. I'd like a little bit of an advance, so I could make a list of all the things that I want to ask people that I want to know that maybe.
Man, that's a good way to find out who's a liar, huh?
Right.
You're like, I already know the
Right.
answer, but let me ask you this question.
That would be a really, really busy 24 hours for me.
Wait, I might need to be able to shapeshift to be able to fly to get to all the places I need to go to read all the minds I want to read in 24
right,
hours.
right.
Can we combine these powers?
See, I really wanted to teleport. You didn't give me that option.
No, it wasn't one of the choices. So okay, well.
So that's off the table.
So invisibility, I think, could sort of give you more of the advantage to teleporting because you could invisibly jump on a plane, jump in someone's vehicle, and just get where you need to go.
Yeah, but 24 hours is not a long time.
It's really not.
No.
Really
So what would you choose?
What would I choose?
Yes.
Honestly, I'd probably choose the shape shifting because there's so many possibilities, right?
Okay.
Like I can be a bird, so I could know how to fly. I could shapeshift into a fly, so I could be a fly on the wall. You know, there's just so many things you could do with that. And I don't think I'll disclose any more of my ideas because it's a slippery slope. I'm telling you right now. Do you have any other questions for me?
No, I just, I do have to say I'm definitely a fan of yours this summer,
I love you.
Every
Kelly.
time you post something, I'm just very inspired by you and your story, and I love how genuine you are with your people and helping them.
And my sobriety, I talk about it on here. I'm coming up, the 27th will be 8 years since I have had a drink of alcohol.
Yes, I saw that. That's awesome. That's a long time. A day is a long time.
Oh, I could tell you exactly how many days it is. Hold on. Not that I'm counting. I'm totally counting. 2,906 days today.
That's amazing. That's
Pretty
amazing. Summer has an amazing story. If you don't know her, ask her about it. I've shed quite a few tears. I think
quite an open book.
Yes, some of the things
my sponsor tells me all the time I need to write it out because at the very least I could, share it in some sort of literature that would help my fellowship.
It's wonderful, and I think that's sharing your story and just being genuine in who you are. I think when I got into this industry, I was so worried about not fitting in.
Me too.
And I just was like, you know what, forget it. I'm just gonna be me, and I think I'm most proud about that is that I've just stuck with being who I am. I've never tried to pretend that I know things I don't know. I may say yes to some things that I'm uncertain about, and then I'll double check and say, oh no, I guess we can't.
You're just verifying information, really.
But as far as like being a genuine person and just being real with people, that's something that I've never changed. And it's important to me to work with other, like-minded people that are that way with their clients as well. And I can tell that you are because your clients, the way they talk about you is awesome.
Oh, thank you. And same for you.
Thank you.
I've never heard anyone say an ill word about you.
Yes, Google
Ever.
blocks those.
I have it set up that way. It's fine.
If you give me under 3 stars, you're not going up.
This is fun. We'll have to do it again. Let me think of some more stuff that I want to extract out of that amazing mind of yours, and we'll schedule another episode.
Well, I hope this wasn't too boring for you. And for anybody that knows me, I am extremely nervous on camera, so please forgive me for that.
You did great.
This
You're not giving off nervous vibes at all. We're just having a conversation.
Well, I can talk all day. So if you really want to talk to me, come to my office. We can talk all day.
And she is Kelly Carrera at Signature Home Lending. What's your phone number, Kelly?
Phone number is 661-817-6131.
So if you have any lending questions at all, give her a call. There's no such thing as a stupid question.
No.
Not at all. And I think that's it. Do you have anything else you want to add before we take off?
Thanks, Summer.
Absolutely. Thank you so much for being here. Thank you so much for tuning into another episode of the Be Better podcast. And we'll see you again soon. Have a great day.
Everyone. Be better.